Welcome back. Now, Chinese stocks were a little changed this morning, but were set to post their biggest weekly decline since early August on trade uncertainties and, of course, the slowing growth ahead of a week-long holiday. Now, profits in China's industrial firms also contracted in the month of August, reversing the previous month's brief gain as weak domestic demand and the trade war with the US weighed on corporate balance sheets. Now, Hong Kong shares did manage to slip by close of trade. Japan's Nikkei index was down 1.24%, the Hang Seng 0.3% lower, that's just below 26,000 points, while the Shanghai Composite was flat below that 3,000 point mark. Over on Wall Street, however, US stocks also slipped last night as the release of a whistleblower report tied to the Democrats' impeachment move against US President Donald Trump kept uncertainty on high, and that comes after wild trade comments from China's top diplomat helped to limit the losses. The S&P 500 briefly turned higher late in the session after China saw that the state councillor and foreign minister said that China was willing to buy more US products. Earlier in the day, the released whistleblower report alleged that Trump not only abused his office in attempting to solicit foreign interference in the 2020 US election, but that the White House also tried to lock down evidence about that conduct. Taking a look at the market, the Dow Jones Industrial Average 0.3% down, the S&P 500 losing a quarter percentage point, while the Nasdaq dropped over 0.5% in trade as well. Well, let's quickly take a look at how things are faring as well on that European market picture. Well, it has been indeed a market picture that has needed quite a lot on the local front. It has taken in some of what has happened when it comes to the China-US trade war, and of course with industrials seemingly not doing too well. A sense of negativity has certainly boiled over onto that market picture. Let's quickly get a look at how the markets are faring right now then as well. While that market picture does seem to be a little bit mixed as well on the local front, the All Share seems to be headed for a second week of declines then. It did need as much as 2% then in order to avoid a second week of decline, but not to be this week. Certainly headed down then and at 55,271 points. The industrials are seeing a much better picture, while the financials also just languishing a bit today. Overall as well, on the commodity share front, you're seeing the resources head higher, but unfortunately as a segment, the gold and platinum counters aren't doing so well. And also the commodities themselves are certainly seeing a slightly weakened picture today. 1550, rather, this is the currency picture, should I actually say. The US dollar, certainly some strength coming from that US dollar, while South Africa seems to be struggling just a little bit there when it comes to it and hanging above that key 15 rand mark. 1852 for a British pound and 1646 then for a euro. Continuing, of course, then to unpack how things are faring on that commodity front, as I said, $1,492 a fine ounce for gold, so weakness there. Platinum still above the key 900 mark, or $61.84, almost erasing everything that has happened since September 14th, of course, when we saw that Saudi Arabian oil facility have drone strikes struck against it, which Iran has again denied having been involved in. And again, that European market, a sense of green flowing through then right across that market, despite the negativity that has come from the US yesterday and this morning, having seen Asia also drop off a little bit there too. Let's unpack that market picture now with Warwick Lucas then from Galileo Capital. Yes, we've seen South Africa's rand weaken quite extensively. We also just had quite a bit of economic data as well come out, around 4.5% for the likes of PPI. We'll unpack that and wrap that up a little bit later on. But for now, let's get into that market picture with Warwick. Warwick, really appreciate it. Thank you so much for the time. It has been a time where we've seen particularly South Africa's rand head back above 15 rand or so. It seems to be a little bit more sustained in and around that mark. Has it become a barrier at all anymore, or are we just sort of looking past it now and hoping that the rand sort of just doesn't jump beyond 15.10 odd?
I think it's a bit of range trading at the moment. We do have a little bit of a risk-off environment as well in the OECD countries, Europe and the US, and I think that's also contributing to the rand after its initial bounce on the back of strong precious metal prices now consolidating and just hanging back a bit there.
Yeah, you speak about precious metal prices, the gold price even going below that 1500 mark. It was an important mark for it. Is it such a big deal that it isn't there right now?
I think there's a process of digestion going on. I mean, part of it was really hedging against the interest rate environment and the deflationary concerns out there, or systemic concerns out there, and with the ECB coming in and saying, well, okay, we're going to cut rates and do a bit to help. I think some of those concerns dissipated. So the gold fizzled out a little bit there, and I think just looking to consolidate a bit.
Yeah. Overall, on the general markets side, we've certainly been looking forward towards those trade talks between the United States and China. It seems that recent talks don't head in the right direction, but talks are scheduled for October 10. Do we get something? I'm not even saying a resolution, but are we going to get something, do you think, out of that?
Yeah, look, a sense of Groundhog Day, to be sure. I mean, look, they've been making the right kind of noises, both sides. I mean, the US has spoken about deferring tariff dates, sure. And China has spoken about, well, they've bought more agricultural product, and they better natured tweets and comments than was last month. But whether that actually amounts to real progress remains to be seen. Yeah,
I think it certainly does bode very difficult then for the market. Overall, equity front though for the JSE, second week then of declines clearly. It has been a tough time. Where does one actually sort of look when it comes to the JSE? Should you, and I'm saying this not obviously as a value investors, but really looking at it sort of interim and short term, this year has not actually been that great of a year when considering last year's losses and trying to make up for that too.
Yeah, I mean, it's been a very difficult year for many individual shares, and frankly, some of the best performers has simply been the index as a whole, where you basically chicken out from taking specific bets, and you say, oh, what the heck, well, let me just take my chances with the whole market. And that actually, 9 times out of 10 this year, has been the best play. Yeah. So, that's, I guess, a sign of a volatile time.
Yeah, speaking of equities, the PIC headed towards what should be a stake in the biggest fiber company in Africa. That's bound to be quite a massive deal. And I mean, yes, complicated in the way it all comes about. But what does that say about the PIC still looking for great bargains in the market?
Well, I think the PIC also has the issue that it is such a large entity. It really has to struggle to find deals that move the needle. This is quite an interesting one. I mean, Econet has for a long time, from very humble roots in Zimbabwe, built up to be quite a formidable global player. Certainly a scrappy company. We've seen in the past they had a relationship with Altec, which didn't really end that well, but nevertheless, Econet went on obviously to bigger and greater things, and here they are back again in the form of liquid. So I mean, good luck to them. A different African global champion.
Yeah, good time to list maybe for Liquid Telecom, or is this perhaps the bad time, considering that the market isn't really sure of where it is and it may not be in the upswing of the market picture?
Well, I think it's in terms of emerging market assets. I mean, emerging market assets are a bit bombed out, but not fatally so. So they do look like something different. So perhaps in terms of a longer play, it may be an okay time to list, but certainly not. The equity will be expensive to them, so I'm sure they're going to try and issue as little as possible.
Let's see what happens. Always appreciate having you, Warwick. Thank you so much for the time. Warwick Lucas from Galileo Capital.